Hey, Mike Swanson. I'm going to talk real briefly about the stock market and show you some stocks that I'm looking at right now that look pretty interesting, and a couple that I recently recommend on the website. But anyway, before we get to that, this is the S&P 500, and of course we've been going up the past couple of days, and all year the market has basically been in this sideways trading range. And in November, it went to the top of it. We had to pull back off of it. I was actually hoping it would pull back a little more than it actually did down in the long-term moving averages, because that would have made a better buy point, but it didn't do that. It held about the 50-day moving average, and it's been going higher. And seasonally in December, the market always goes up the second half of the month as you enter the new year. What happens is a lot of people just, if you've got gains, it doesn't make sense to sell until next year for tax reasons. So people simply hold on, and people that are running hedge funds and mutual funds, they tend to, buy if any remaining cash they have to try to make some extra gains for the end of the year, either to make up for lagging the stock market and underperforming, which is actually usually the case for like 80% of mutual funds and over half of hedge funds. So that adds extra buying into the market. And people also running these things tend to put money in the best stocks that have been performing the best throughout the year, so they can show that to their investors at the end of the year, and people think they're in the hot stuff. So anyway, those are two things that tends to help the market up. But there are some things to be cautious about that I think could be troubling for some point in the first quarter. And I've already, mentioned the investor sentiment above this video, and everyone is basically bullish right now. Almost every single email I get is from someone that wants stock picks, someone who wants to know what to buy or how to buy safely at this point with the market going up. And no one is bearish. I don't know anyone actually that I've talked to or in person or on the phone that's bearish on the stock market. So that's a bit worrying. The second thing is that one of the reasons people have for being bullish on the market is a couple of people, when I've pointed out this thing with the sentiment as being a negative thing or a potential problem, is they say, well, that doesn't matter now because the Fed is simply printing money and we're in a different type of market. Well, the problem is that even though the Fed's printing money, there's signs that their quantitative easing operation is actually starting to backfire. Their stated purpose in the summer, when they're proposing it, was that they were going to try to make long-term interest rates go down, even lower, force them down by buying treasury bonds and mortgages to help stimulate the housing market in 2011 and prevent any problems with people's mortgages expiring or rolling over into variable rates and so forth. So the thing is, the opposite has actually been happening. Long-term bonds are dropping in value as the Fed is buying bonds. What's happening is that the investors in the bond market are apparently getting worried about inflation and are more worried about the inflationary impact of quantitative easing than the Fed, being able to prop up bond prices. And that's something that, if this trend of falling bond prices continues throughout next year, and you can see bonds are approaching the support level, so we can't expect some sort of bounce here at the least. But if bonds end up falling through this and continuing lower, at some point that's going to have a negative impact on mortgage rates, on the economy and the stock market and so forth. It's not a problem now, so I'm not telling you to worry about that now. This is something to keep an eye on for next year as a potential worry. So right now the market's still in an uptrend. Don't worry about a top or bear market, but be on guard next year that these things can be a problem. So anyway, let's turn to some stocks. And two I've put on the website and recommended in the Power Investor service recently is Fabrinet. And Fabrinet is a Thai stock. It's the only Thai stock that you can buy on the U.S. stock markets, actually. And that's critical because Thailand is one of the hottest markets in the world. And this is a stock that, I've recommended the Wall Street Window Power Investor service. Another one I've recently recommended is AXL, and it's breaking out of a stage 1 base. It's actually in one of the hottest sectors in the entire stock market, the auto parts sector. You can take a look at the auto parts sub-industry group, and you can see it's been absolutely on fire. And now for some stocks that, now I'm not saying buy these stocks now, they're already starting to move up and so forth, but I just want you to have an idea of the stuff we're looking at. And here's a stock that's in a stage 1 base that if it breaks $9 a share, will be breaking out of it. So I'm not saying buy it now, but if it breaks $9, then it's going to be exiting the stage 1 base and it should be having a nice run there. Another stock in the same position is this manufacturing company where its resistance now is about $4.60. And two other stocks that I'm watching, I want to see what they do basically over the course of the next month. Two China stocks, is symbol is DANG. This stock just recently IPO'd, and it gapped up on IPO day from being priced way down here. But this is basically the Amazon of China. It's the biggest online retailer in China, in fact. I think of it as like Baidu from a couple of years ago. If this stock can consolidate here for several weeks and then breaks $33, be interested in buying. It just surges right now. To me, that's too risky. I want to see base building happen. Another stock that IPO'd at the same exact time, which is basically the YouTube of China, is YOKU. Both these stocks you can see pulled back, and I'm hoping to see consolidation here. If that occurs, these could be some red hot stocks for 2011. So anyway, I wanted you to get a good idea of some things I'm thinking about, looking at this morning and going forward, and be talking to you later.